So first, I want to thank everyone for attending this webinar for the tax relief provided by the CARES Act. I also want to thank Elevate Rapid City for connecting us, because we all know that these are uncertain times and we have a large act here with a lot of information, and there's a lot of different components to it. Quite frankly, some of the components change almost on a daily basis, and there's a lot of misinformation out there. So hopefully with this webinar, we can get you the information you need for your business, dispel some of those rumors, and give you enough information where you can go back to your tax advisor, determine how this impacts your unique tax situation, and then you can take action based upon that. For today's presentation, we'll start off with talking about a handful of the various loans and forgiveness programs. We'll jump into the various payroll related items, and then we'll take a step back and look at how this will impact business tax returns that are tax filings, and as well as how that filters down to you as an individual. So first, I'll introduce myself. My name is Greg Miner. I am a tax senior manager at Ketel Thorstenson, primarily working with business entities and mostly within the retail and medical areas. So to kick us off, I'll pass it over to Brady Larsen, and I'll let him take it away.
Good morning, everyone. I guess I'll introduce myself a little bit. Brady Larsen, I'm a tax manager at Ketel Thorstenson. Been with the firm about 8 years now. I mainly specialize in small business and agriculture. Rachel passed along a little bit of a message here she wanted us to read. A series of trainings are being offered that cover everything from health insurance, mental health, marketing to business resources through Elevate. If you missed those trainings, or you can find those previous webinars on the Elevate Rapid City YouTube channel, and you can view upcoming webinars on the Elevate Rapid City Facebook page. Like Greg said, this is very new legislation. It's complicated, very detailed, a lot of rules. So we're just going to touch on the very highlighted, highlight all the topics, the main ones. Like you said, consult your tax advisor, your accountant, to get all the rules, all the details, because this legislation was just recently passed. So we're waiting on guidance and on some of the things, and then the guidance has been changing as this evolves. So the first couple things we're just going to talk about are the disaster loan assistance. I went on the SBA website this morning, and according to their website, the funding for these has ran out, but they are Congress is working on providing more funding. So as of now, they say this funding has been used up, but Congress is trying to work on more to appropriate more funds to these different funds. But there's the SBA loan federal grant. It's the economic injury disaster loan. Your business would qualify for this if you'd experience revenue loss due to COVID-19. So this is pretty widespread. A lot of businesses could take advantage of this. Originally, the federal grant was going to be $10,000 per business, but they changed this to now it's $1,000 per employee. And this is just a simple application through the SBA website. There's more details and rules on who qualifies on this, but this is just a baseline of this this program. Then there's also the payment protection program, a much bigger program offering forgivable loans. So it's set up as a loan, but it's forgivable if you follow the rules. What you use it for, if you use it on payroll, rent, utilities, and mortgage. 75% of it had to be used on payroll. But how they calculated the amount of the loan was 2.5 times your monthly payroll or your self-employment income. And this is different than the SBA. This one you actually have to apply through your banker qualified. They were offering this qualified program. And then one more thing that is just coming out, the USDA for the farmers and ranchers, they're working on some tax relief or some assistance as well. It hasn't been finalized, but the USDA has rolled out their preliminary plans. So stay tuned for that. The main thing we're going over is the CARE Act, but we just thought we'd touch on the Family First Coronavirus Response Act as well. A requirement for certain businesses to provide family medical leave and also emergency paid sick time. So the family medical leave was for employees that were unable to work because they're caring for someone because of school or daycare closures, emergencies. I guess we're starting to get into that as things close down. This could be a possibility. School's obviously been closed, but maybe daycares are starting to close more too, or you have to care for somebody. So certain businesses are required to provide this paid leave, but then the employer can apply for a credit of $200 up to $10,000. And this is also applicable for self-employed individuals. Emergency paid sick time, a requirement for certain employers to provide 80 hours of paid sick leave to full-time employees if they're unable to work for specific virus reasons, if they've contracted COVID-19, if they are caring for someone who's contracted COVID-19, if they're in quarantine recommended by a doctor, all these different applications of when the employer would be required to provide paid sick time to these employees. But just like the other one, the employer can get a credit of up to $511 per day. A lot of rules based on how much, and when you have to start calculating it, but can get up to $511 per day. And this is also applicable for self-employed. So if this situation gets worse and there's more and more people having to stay home or more people contracting, this could be a big deal of having to follow these rules of providing sick time, but then on the other hand, the employer can get reimbursed credit. So also they rolled out this, what they call an employee retention credit. It's not available if you received a PPP loan because PPP loan is covering your wages already. But if you didn't qualify for that, or you didn't apply for that, or you didn't get funds for that, you can take advantage of this credit. It's a credit available for wages up to $10,000 per employee, and you get a 50% credit. So how you do this, how you get the credit, is first of all, you just start reducing your payroll tax deposits. So if you're expecting you're going to qualify for this credit, you can stop paying your payroll tax deposits until you reach what your credit's going to be. And then on your quarterly payroll tax information, your 941s, this all reconciles out on how much credit you get, how much payroll tax you were paid in or didn't pay in. So that's one way. Or if you want to expedite the funds coming to you, you can submit the form 7200 and apply for the credit right away. So either is acceptable. It just depending on when you need the funds and depends on how many employees you have and all that, your particular tax situation and what makes best sense for you. And then there's also they passed where you can defer the payment of your payroll taxes. Now this is when you deposit them, if you're depending on what your schedule is, your monthly or weekly or biweekly or however that is, you can defer the payment of those until in 2021 and 2022. But this is just the employer portion. The amount you hold from the employee's check is still being required to be deposited. But the employer portion you can withhold. So this is in conjunction to the employee retention credit. That one you could withhold, both portions to make up your credit. But so this would be in addition to that. Once you've claimed the credit, max the credit out, you can delay the payment of payroll taxes. And this also isn't available if you receive the PPP loan because the PPP loan would be covering your wages expense. Unemployment, you probably read a lot about this or seen a lot of this on the news, the expanded unemployment. Federal governments put funding in so that unemployed individuals can receive up to $600 more per week than usual. They extended the time frame of this. Normally it was 26 weeks. Now it's up to 39. So they extended an additional 13 weeks. And then unlike before, where self-employed cannot claim unemployment, now the self-employed can apply for their unemployment and receive unemployment as well. And that's all I have for right now. I'll turn it over to Greg. Thanks, Greg.
Thanks, Brady. So we'll switch gears here a little bit and start looking at how your business tax filings will be impacted. So first up, I have the net operating losses. So first, what is a net operating loss? A net operating loss is when your business shows an overall loss for the year. For most of you business owners, those losses then pass through to you on your individual returns. And then if that loss is so great that it offsets all of your other income sources, wages, interest, dividends, capital gains, whatever, and you still have an overall loss position, that could generate a net operating loss. So if you have a net operating loss, we can now carry that back up to 5 years. Under the old law, we could not carry that back, and we could only carry it forward. The benefit to you of being able to carry back those losses is that if you had profits in prior years, you can take those losses to offset those profits and get a refund on the tax dollars that you had paid in those previous years. So that could be very advantageous to be able to get you some cash in your pocket now, rather than carrying that loss forward into future years and paying less tax dollars down the road. Also, another item that changed with the CARES Act related to net operating losses is under the prior law, anything that was carried forward for a net operating loss was subject to a limitation. So we could only offset 80% of any future taxable year's income with those net operating losses. So the taxpayer would be, best or worst case scenario, would be paying 20% of their income on income taxes still. So now we no longer have a limitation, and any future years we could 100% offset income with any NOLs that we have. Another item that was eliminated was with the Tax Cuts and Jobs Act, passed in December of 2017, was a new concept that we would have to limit our overall losses from businesses during the year to a net position of $250,000 worth of loss. So now that limit has been released, and we can now take losses to the amount that we have actual deductions and losses for. So qualified improvement property had a technical correction. With the Tax Cuts and Jobs Act, they added qualified improvement property, which is interior improvements to non-residential buildings, excluding any enlargements, expenditures for elevators or escalators, or any internal structural framework. In the Tax Cuts and Jobs Act, they accidentally ended up recording into law that that was 39-year property and not eligible for bonus depreciation. This was not their intent. So now with the CARES Act, they have now changed that to being 15-year property and eligible for 100% bonus depreciation. So what does this mean for you? If you have performed any sort of improvements that fit this qualified improvement property category, you could go back to your 2018 and 2019 tax returns, amend those to potentially fully expense those improvements and be able to get some additional tax dollars now by taking those expenses all at once rather than taking them over 39 years. Interest deduction limits for large businesses. There was a limit imposed on how much of their adjusted taxable income they could spend on interest and take a deduction for it. Previously, that was 30% of adjusted taxable income, and now that has been risen from 30% to 50%. So again, that only impacts large businesses. With the CARES Act, they expanded the definition of some employee fringe benefits that can be offered. We can now offer our employees a fringe benefit of paying their student loans directly, up to $5,250. So this could be important if you have a workforce that is majority of those that have student loans, and you want to give them some additional compensation, but avoid the income tax penalties of giving your employees additional compensation. So if you're able to use this structure, any funds that they're receiving through this would be tax-free to the employee, plus they wouldn't be paying any Social Security or Medicare tax on this, which means that you as the employer are also not paying FICA tax on this compensation to the employee, as long as you're using it as an employee tax-free fringe. So now we're shifting gears here and looking at individuals and how individuals are impacted. So first, we're jumping into retirement accounts. So for tax year 2020, there's a new 10% early withdrawal exclusion related to retirement accounts. So if you're a qualified person, which means that yourself, your spouse, or dependent was diagnosed with COVID-19, or you experienced financial consequences of the COVID-19 pandemic, then you could qualify to take up to $100,000 out of a qualified retirement account and not have to pay that 10% early withdrawal penalty. And likewise, those that do take funds out of a retirement account during 2020 and are a qualified person have the option to either pick that up as income, the distributions that are taxable, pick that up as income over the next 3 years, or if the funds are repaid, then it was just treated as a rollover. So if you repay the funds within 3 years, then there's no income tax impact, and as well as no penalty for removing those funds as long as they're repaid. So this could be a great option if someone really needs some cash now, but foresees that in the next couple of years, they'll be able to replace that. This could be a good option for folks. And last couple of items on retirement accounts. For those of you with 401k or 403b accounts, the maximum loan limits have been increased from $50,000 to $100,000. And additionally, any payments that were due from between March 27th of 2020 and December 31 of 2020 have been delayed by 1 year. And lastly, those that had required minimum distributions during 2020, so those that are age 72 or older and had 401k or IRA type accounts, they no longer have to make required minimum distributions during 2020. But if you took your RMD early in the year, there's no way to undo it or to put the money back, so to speak. So if you've already taken it, you can't undo it. But for anyone that hasn't taken it yet, there's now no longer a requirement. So some additional items related to individuals. There's an expansion of the definition of what a medical expense is. So they added menstrual care products to being a deductible medical expense. So this is defined as tampons, pad, liners, or other similar type products can now be deducted as an itemized deduction and are also eligible for medical flexible spending account reimbursement or healthcare savings accounts. Charitable giving just got a whole lot easier. So they added a $300 above the line deduction for charitable contributions. So what does that mean? So what that means is the first $300 that you donate to a qualified charity, you just get to take a deduction for. There's no hoops or thresholds to meet. It's just real simple. Up to $300, we get a deduction for. Anything after that would be considered an itemized deduction. And in previous years, we were subject to a 60% adjusted gross income limitation, and now that's been removed. So charitable contributions can be taken without any sort of limitation to what our adjusted gross income is. So everyone's curious about the stimulus checks and what's going on there. So just to summarize what's been happening with the stimulus checks. So each adult would be potentially eligible for a $1,200 stimulus check. And then for each qualifying child that they had, ages 16 and younger, would also be eligible for an additional $500 in stimulus. So reading that, there is an age group that potentially wouldn't receive any stimulus at all. So if you have a dependent who is 17 or 18 years old, so the last couple of years of high school, no one will receive any stimulus for someone in that age group. Nextly is if someone is a dependent of someone else, so like maybe a college student. So when you get to that 19 to lower 20s, if mom and dad are still claiming them as a dependent, then they wouldn't be eligible for any sort of stimulus check. So this is just something to consider when we're filing our 2020 tax return is that a child still a dependent? Would they be better off claiming themselves? So those are the baselines, but there are some income limitations. So if you are single and your adjusted gross income was less than $75,000, or if you're married and your adjusted gross income was under $150,000, then you would meet the qualifications and should get the full amount of the stimulus checks. If your income was above those thresholds, then you would be limited or potentially not receive any stimulus at all. For example, if you're married and have no dependents and your adjusted gross income was above $198,000, then you would receive no stimulus. So the way the stimulus is working when they're looking for these numbers and who to give stimulus checks to is by default they're looking at your 2019 income tax returns. And if those haven't been filed yet, then they will substitute your 2018 returns and look at those. So for a while there, that gave us an opportunity to gauge how quickly or how slowly we wanted to file some of these returns. So if someone's income was significantly higher during 2019 as compared to 2018, might have been a good opportunity to slow down that filing and wait until that taxpayer received their stimulus check. Or likewise, if the inverse was true and their 2019 income was significantly lower, then it's a good opportunity to get that filing done as soon as possible. So technically speaking, the stimulus checks that we're receiving are in advance on our 2020 tax return credits. So the stimulus check is actually a credit on your 2020 tax return, and we're just receiving that in advance. So that means that on our 2020 tax returns, there will be a reconciliation that determines, based on our 2020 tax return, how much credit should we have actually received. Now, the good news about this is that recalculation cannot hurt us. It can only benefit us. So if for some reason your stimulus check was limited or you didn't receive one at all, when your 2020 tax return is filed, there'll be a recalculation, and if your income decreased, then you could get some additional stimulus money. And to keep in mind, the IRS is using your direct deposit information that was used on your 2019 or 2018 tax return Most of those, from my understanding, have already been deposited in the past week or two. And anyone that they did not have direct deposit for, those are being mailed out to the address on record. If you have moved or have a different bank account, the IRS does have a tool on their website that you can use to update them on where to send the stimulus checks. And of course, everyone loves deadlines, and most of you are probably aware of these, but I just wanted to brush over them quickly. So the April 15th deadline has been moved to July 15th. So that means that for your personal income tax returns that were due on April 15th, those are now by default due on July 15th. No one had to make any elections or file any paperwork to do that. It's just automatic. And also, if you are the type that funds an IRA or an HSA account, the funding deadline to make 2019 tax year contributions has also been pushed back to July 15th. I would only caution you that this is an unusual event. So if you're using that additional time to fund your IRA or HSA, just make sure you're very careful with whoever your trustee is on that account, that you get that applied to the correct tax year. Tax payments have also been pushed back. Anything that was due between April 15th and July 15th are now due on July 15th. So that's income tax payments only, not dealing with any sort of other sales tax or payroll tax. So only income taxes have been pushed back. So that means that your balance due on your personal tax return is now due on July 15th, and quarter one and quarter two estimated tax payments are now due on July 15th. So that sums up the content that we had prepared. And then we'll take a look to see if there's any questions.
Also wanted to add on the stimulus, if you want to check the status of your stimulus payment, the IRS has a tool on their website as well for that. It's not always 100% accurate because some clients might have went on there and it says payment information not available, but others it says when the money was deposited or when it's supposed to be deposited, or if you're going to receive a paper check or like. Yeah, I guess we'll open it up for questions. If you got questions, submit them here on the question and answer or through the chat box. We got one here. When submitting the paid sick time for tax credit, what all is needed and who is that submitted to? For example, if we were to have a doctor's note for an employee, who it's submitted to is that credit's taken on your quarterly payroll tax return, 941. I guess I'm not sure on the rest of the question. If you could clarify that a little more, of what is all needed, what you mean by that.
And at the moment, it looks like that was the only question that we had. So we will hang out regardless and see if any questions come through, and we'll answer those as they come through.
Okay, we got clarification. Doctor's note might just be for filing purposes. All right. Yes. Yeah, the doctor's note you just keep on file if you ever had audited to prove that the client was indeed in fact affected by COVID. In reference to the PPP loan program, can the funds be used for employers' payroll withholding? The PPP cannot be used for the employer's portion of payroll tax. So it does cover the gross payroll. So in essence, you're paying the employee's portion of withholding with that, or funding it with that. But the employer's payroll tax, you cannot use the PPP loans for that. if an employer laid off an employee and now received a PPP loan, do they need to recall the employees, and the employees need to go off unemployment and now get wages from the employer? There are some rules on the employment level of staff you have. There's a few different tests and it's kind of cumbersome. So I'll say that. Definitely look on the details on the exact rules on the employees, the employment status you need to keep. They call it the full-time equivalents that you need to keep to qualify for the forgiveness of the PPP loan, but it's cumbersome. So definitely look into the rules on that. Time frame for spending the PPP is, in order for it to be forgivable, you have to spend the funds in the 8 weeks. I think you have until June 30th to spend all the funds. But if you want it to be forgiven, you have to spend it in the 8 weeks from when it was funded. Another question here: we received a PPP loan and declared 14 full-time equivalents, although we have 19 people on staff, some 30 hours or less. Our understanding is that 75% of the PPP loans needs to be spent on payroll, and 15 FTE don't really come into play. Is that correct? You're correct with the 75% needs to be spent on payroll. I guess I'm not sure what you mean by 15 FT don't come into play. Is that if your staffing level is going to stay the same, you should be fine there.
So in regards to the stimulus money on the 2020 tax return, no, you would not have to pay back any stimulus funds received. Anything that you receive, that is your money and it can't go away, is what they do on your 2020 tax return. Is they will reconcile what you should have received based on your 2020 tax return, and if you're due additional credit or additional stimulus money, then you'll receive that as a credit on your 2020 tax return.
Is there a way to check the status of the EIDL? I'm not aware of any online one to check the status. I would just suggest contacting the SBA to see where they're at. I know they've been delayed on getting back and processing those applications. So
yeah, and I do happen to know that with the EIDL grants, I did happen to see one come through yesterday. The individual had applied on the Monday directly when the online forms were first available, and they received funds yesterday. So that would suggest to me that they were coming soon. That individual, after applying for the grant, did not receive any additional communication or anything of that nature. Just all of a sudden, the appropriate amount of funds showed up in their bank account. Oh, and someone just submitted a question and I accidentally clicked dismiss. So if you just submitted one within the last minute, please resubmit that.
I think we can view the dismiss questions here. I guess a follow-up on the PPP loans. In other words, we weren't bringing back all 19 to where they were before our reductions, but the majority we are, yeah. The way I understand and read it is if you have until the June 30th to restore your full-time equivalents. If you don't, you can have some reduction. I don't have the numbers off the top of my head here, but you have until June 30th to restore your employments the way it was before, employees, total FTEs. Is there an easy report to pull to QuickBooks to figure out FTEs? I guess I don't know that for sure. Do you know, Greg?
I'm not a payroll expert, so I don't. I wouldn't know that off the top of my head.
I don't think there is. I think you can pull the hours, and then you have to use a spreadsheet to calculate the FTEs.
So will the EIDL grant need to be reported on your 2020 return? That's a question I've been struggling with myself. So the grant is tax-free money, so it's not taxable income. But if you file a partnership or corporate tax return that requires a balance sheet, yes, there will probably have to be some sort of metric of how we report that we did receive funds in order to get our balance sheets to work out. But the long and the short of it is that anything that is forgiven with the PPPs or that is considered a grant with the EIDL is not taxable income. And I also want to put out a reminder out there. So we did mention at some point that, especially with the PPP loans and the EIDL grants, these are somewhat moving targets on a daily basis, and we push out additional information as it becomes available on our website. So please check for updates at ktllp.com. Check it regularly, bookmark it, and come out and see us and see what's going on.
What is the number, another question here, what is the number of hours per associate per week required by the PPP loan for that associate to be considered full-time, 30 or 40? I don't think they've given us yet a definition of that yet, have they, Greg, that you've seen?
Not that I particularly know of.
We've been defaulting to the ACA rules for full-time equivalents.
What are the ACA rules, Brady?
I think 32 hours a week is considered full-time. Does the PPP loan full-time equivalent calculation take part-time workers based on hours and combined to be an FTE? Yes, the part-time employees are factored into the full-time equivalent calculation. Any more questions?
So to the person that had the question on, is there an easy report in QuickBooks to figure out your full-time equivalents? We do have QuickBook Pro advisors on our team. So that's a question that we could forward to them. If you could email myself or Brady that question, we can forward that to our pro advisors and see if we can get something back for you.
And then we've got a question. PPP loan requires the employee's income to remain at the same level. Is that just for the 8-week period or for all of 2020? Do you know that answer, Greg?
I believe, and I would have to double check with the to know for sure, but I believe when we're looking at forgiveness, we're only looking at that 8-week time frame. I don't believe the rest of the year forward is really in consideration. So in regards to, so the question is there any discussion on helping commercial property owners that have tenants that aren't able to make lease payments due to the shutdown? So I would say large in part, the PPP loans, for example, are based on payroll, and the EIDL is based on the number of employees that you receive. So really the support that you could get is essentially just going back and working with your bank. I know that for retail loans, there are provisions out there now that say that we can push those payments off for a year. I would imagine if you went to your commercial loan officer and asked for a modification, that given the current environment, they would probably grant that. I know I spoke to my property managers here this last week, and they were indicating that there's various programs locally in Rapid City area that tenants could get in with in order to get some assistance as well. The details of that I do not know, but something to get with your property managers about.
With the PPP loan and some of the employees have quit, do you need to rehire to keep that same number, or can you deduct that amount off and return that portion as unforgiven? Yeah, if based on the calculations, you don't have to have all of it forgiven. If a portion of it can be unforgiven, and that's fine. It's just an amount you'll be paid back, have to pay back, and the rate's pretty reasonable. I think it's 1% on that loan. So. Yeah, if you find yourself in a situation where your loan is calculated only a portion of it's forgivable, it still just then transfers into like an actual loan. In regards to the PPP loan, does utilities include fuel and cell phone? Have you seen a definition on utilities, Greg?
The definition of utilities.
I haven't seen a breakdown of utilities. I would imagine cell phone would qualify. Fuel for vehicles, I would lean to probably no. But I don't think I've seen an actual definition of utilities.
Right, and the any comments I've seen about what a utility should be would be, I would say, traditional building utilities, gas, electric. I have seen, I believe I've seen that a lot of folks are considering internet and their phone to be part of that definition as well. It's probably best to look at that on a case-by-case basis to see how close you are.
Will PPP payroll funds cover overtime and vacation? If vacation can be included, can the staff be paid in lieu of taking it? In other words, they can keep working and also be paid their annual vacation, and all the payroll contributes to the 75% PPP payroll component for forgiveness. I guess I'm not sure if you're able to do that or not. I know if it can cover overtime and vacation, but I don't know if you can be paid double. I guess I think that's what they're trying to get at, is be paid and be paid vacation so you can meet the 75%. I'm not sure if you can do that or not. Do you know, Greg? I don't think I've read anything where.
In regards to vacation and overtime?
I think they're saying in order to get to 75%, can they pay out their normal wage and then also pay out their vacation?
Can they also pay out their vacation? So Dan, I think that's something that we would have to get back to you on. I don't have that answer off the top of my head.
Do we have to keep employees at the same rate of pay during the 8 weeks? I believe it can be modified slightly, but I don't know the percentage off the top of my head. You agree with that, Greg?
Yeah, if it were me, I would just keep my employees at the same level that they were prior to receiving the PPP loan, because that'll all be forgiven as long as I'm giving that back to my employees. So if I'm reducing that, I guess I would just run the risk of having unforgivable debt. So
right. Yep. And I think there is a percentage that you can reduce, a small amount, but you'd have to run the numbers to know what that amount is.
We did get clarification on the utilities. So so your business cell phone and business fuel for business vehicles are both included as utilities for the PPP loan. So then I just want to ask if there's any topics that you want us to present on in the future, if you could comment those to us, and then we'll retain that list and try to do additional webinars to get some additional information out.
A lot of good questions, guys. Keep them coming. We still have a few more minutes here, I think. It says workers' compensation for small businesses. I guess I'm not sure what the question is there, if that qualifies for PPP loan, maybe.
Probably a topic for next time.
Oh, gotcha. Yep. Okay. You recommend setting up a second bank account to ensure. Now where did that go? To ensure that PPP loans funding is used correctly. I'd say yes. I would, make your payments out of your normal bank account for your expenses, and then transfer the money from a PPP account into your regular bank account. So it's very clear cut of what the funds are being used for. There seems to be some gray areas as far as employees. It would be nice to nail down the guidelines better. Are there any other sources that could clear this up? What would you recommend, Greg? I think the SBA website has a lot of good guidance on it, some FAQs. But like we said, this is a moving target that they've been providing guidance on and then changing the guidance, and just have not had clear-cut answers on a lot of it. So.
Yeah, and we've been keeping the most up-to-date guidance on our website as well.
Yep.
So
Yep.
Check out our website. That has a good collection of the various guidance that we've received.
A little more detail than we've went into. Can you transfer funds from the PPP account into account that pays bills? Yes, that's what we're recommending that you do, is to pay the bills out of your normal account and transfer the funds from the PPP account into that. And Rachel did inform us that this webinar and all the Elevate webinars are recorded, so you can view those on the Elevate Rapid City YouTube channel. If you want to go back and check any of those out. And also don't forget to check out the upcoming webinars on the Elevate's Facebook page. Anything else you want us to discuss, Greg?
Nope, I don't think so. And if you have any specific questions, feel free to email us directly or give us a call. Our contact information is there on the page. And we enjoyed having you here, and we hope to be able to bring you more of these in the future. We got a few ideas on future topics. So I want to thank everyone for your questions, and thanks for attending.